Good evening, students. Now let us, in last class we have seen how to prepare the journal entries, and analysis of the transaction is basically it's a must. First, I'll teach you how to analyze each transaction. Already we have posted by using our rules. Personal account, nominal account and real account. Based on this we have posted. But analysis is very important for each and every entry. Now let us see the analysis. Analysis of recording in the journal. The transaction first, Ram started business with rupees 50,000. Now let us analyze this transaction. The analysis, let us say, based on the accounts affected, nature of the accounts, rule involved and nature of the change. We have to analyze each transaction on this 4 based. Number 1, first accounts affected. Who are the accounts? What are the accounts affected here? One is Ram account. Ram is the person who started the business. Business in the sense here is a cash account. Let us take the cash account. Now nature of the accounts. This nature, what is the nature of this account? This is a personal account. Personal account. Cash is a real account. Ram is a personal account. Cash is a real account. Rule involved. What the rule says in personal rule says, credit the giver, debit the receiver. Credit the giver, debit the receiver. Okay. Now what the rule says about the real account? Debit what comes in, credit what goes out. Okay. Now let us see once again, the Ram started business is the transaction. Now we are going to analyze the transaction. Ram, what are the 2 accounts here affecting the business? Number 1, Ram. Number 2, business. Business we can say it is a cash also. Okay. Now Ram, cash, 2 accounts are affected. Next one, what is the nature of the account? Ram is a personal account, cash is a real account. Fine. What is the rule involved in this personal account? The rule says credit the giver, debit the receiver. Here a real account, debit what comes in, credit what goes out. Now we have analyzed this transaction in this format. That is the accounts affected, nature of the accounts and rule involved. Next, what is the nature of the change? Now here in this personal account, there is a increase. So far 0 in this personal account. Now there is an increase in personal account. That means the credit, and here there is also an increase. So far no money is there. Now the money has come to the business. So there is an increase in the, here is also increase. This account is increased, this account also increase. Increase with how much? Increase with 50,000, and here also increase with 50,000. Okay, now we are going to post that in journal account. Journal entry, we have already seen there is a date column, particulars column, LF column, then debit column and credit column. Now I have erased all those columns. I have taken only this last 2 columns. So where we will post here? Here on the debit side, Ram account is in which side? Credit side. So you post the Ram account in credit side 50,000, and cash account, it is a receiver. Cash is the receiver here. So debit side, debit column, you post that 50,000. Now like that, we have to, now according to accounting equation, what is the accounting equation says? Assets is equal to capital plus liabilities. This is the rule. This is accounting equation. This accounting equation, now asset is increased by 50,000, Simultaneously, capital also is increased by 50,000. No liability here because now only they are starting their businesses. This is the accounting equation. Says assets is equal to capital and liabilities. Assets increased by 50,000. Liabilities also increased by 50,000. So both sides increase only. Both accounts are increased by this investment of 50,000 in the business. Okay, now it's understood. I'm going to rub this transactions. Now I'm going to analyze the next transaction. Okay, fine.